Welcome, welcome. Just getting set up over here, but the stream is live. I'm live, you're live, Trump's alive somehow, and we're going to talk about that. We got full agenda for you today, but settle in, say hello in the chat, and if you're on Twitch, first time I'm ever streaming on Twitch is today, so we're going to try that out, but the YouTube audience is there. I see the Twitter audience is there, so happy to have you. We'll take down the house music as we get started. And again, if you're here, say hi in the chat. It's fun to have the chat going, and got a lot of people on Twitter already. Fourth of July shirt. First time I ever went out of my way to buy a 4th of July outfit, and I ordered the shirt, and it came on July 8th. So wearing it today. Actually, I've been wearing it quite often in the house. It's like a gym shirt, cozy gym shirt. I see Crypto Sailor here in the chat. Happy to have you, man. It's all new for me. I completely changed up my processes, my software, and all that. So this will be the first official stream under the new brand, and I'm going to give it about 10 more seconds, and I'm going to kick it off. It's going to be a fun one today. Got a lot to talk about, and I'm sure you know there's a lot to talk about. And we're live. And like I said, I'm alive, you're alive, and Trump somehow is alive. Welcome to the stream. If you don't know me, my name is Joe, here for Dead Cat Media. Dead Cat Media produces crypto and Web3 content, specifically focusing on what matters most. That's the end user, which presumably is you. It's me also. But if you're here, you're the end user most likely. And that's right. All this amazing technology, all this disruptive crypto Web3 technology doesn't really go very far without customers, end users, early adopters, and retail traders. If this message resonates with you, you are in the right place. Now, don't get me wrong. I still enjoy the fun token speculation. I like to deep dive into the tech every now and then. I love making predictions and, the crypto banter that happens on Twitter Spaces and on these kinds of streams. But I'm an educator by trade, and I know there's a science behind taking in all this new information and using it to your advantage, specifically to make money, to position well in the crypto market in this new asset class. And as an end user myself, I navigate the crypto landscape. I track important trends that impact my own bags. I test out apps. I learn about new tokens constantly. Dead Cat Media is the platform where I pass that along to you, the audience of fellow end users. If you like this kind of content, feel free to support me. Love having new subscribers. Really love having comments down below. I respond to all my comments. And please share this video if it helps you, if you find it entertaining. In the description, by the way, you can join my Telegram, which will give you more insights into what I do and also ways to win money by supporting my content. So happy to have any new viewers. Lots of you are not subscribed, especially those who discover me on the live stream. Like I mentioned earlier, today's the first day I'm ever streaming on Twitch. We'll see how that works out. But yeah, Wolfman, nice to have you in the chat. Wolfman says he likes my rebrand. The rebrand was a long time coming. I wanted to make an official entity focused specifically on the content that I find useful. And like I mentioned, that's content for the users. Yes, the tech is important, but you need people to use it. Otherwise, well, you could look at the markets and you know what happens if no one's using this amazing tech. Token prices suffer, people become disinterested, and then it seems like they're all aggregating on a couple of different chains using a couple different protocols. That's not the way it was supposed to be, right? So my new company will focus specifically on Web3 content, whether that be crypto, AI, just economics, geopolitics as it relates to those topics. And I'm going to be the one to deliver it to you the way that I know how to do: tutorials, interviews, looking at overarching trends. Like I said, anything that impacts my bags probably impacts your bags. And this is a place where I could share what I've learned, and as I learn it, and give some research, focus people onto what I think is an important story or important theme, and then we take it from there. The chat, my Telegram subscribers, all very important part of that process. And Wolfman's asking about NFT collection. You know, I do have an NFT collection that your company made for me, and those will get used. I was waiting for the company to have the LLC backing. And if you're watching this and you just gave me your Omniflix address like 18 months ago, good things are coming. I have to set up on Omniflix now. So like I said, today's the first day for Twitch. Omniflix is next. And I'm just going to find a way to reward audience. A lot of the ideas that I get and a lot of the questions that I get, I wouldn't have thought of them if I didn't have the audience, especially with these live streams and on my Telegram. So, no, I appreciate it. And I'm going to find a way to continuously reward those people. So appreciate you guys joining. Appreciate you guys joining. Can we get some taxidermy cats as merch? There's merch coming. I got all my branding yesterday, finally. I'm really excited about it. I love it. You can see some of it here, but there'll be some cool merch, and I'll be sending that out to people who are continuously supporting my streams, supporting my content. And yeah, I got some shirts. I got some hats, maybe some wristbands, some 80s style wristbands and headbands. I don't know. Whatever they let me make is what I'm gonna make. But we got some items on the agenda. The agenda today is an interesting one. We're going to talk about Trump, of course. We're going to talk about Trump as he relates to Bitcoin and crypto overall. I sold an NFT at a 400x. Amazing. Feels good. I've only done that like one other time. Speaking of NFTs, I use an NFT to get VIP access into a professional basketball game the other day. We'll get to that. But Bitcoin miners, there's a capitulation going on despite prices. And we'll talk about that. We'll talk about Germany unraveling a whale wallet. We'll talk about Ethereum. We'll talk about Cosmos. And we'll talk about leverage trading today. But first, let's look at what I like to look at when I wake up. We're going to look at price performance the last 7 days. I guess meme coins are back. MOG is taking off. I've been told in my DMs that MOG is the official Trump support token. So when you survive an assassination attempt, your tokens go up. That's just how it is. His stock went up. That's just how it is. That might be the secret for lots of these tokens that are struggling. But yeah, we got stacks. That's a big part of my portfolio. Very happy to see that. I did buy some stacks on the way down. I try to get exposure to Bitcoin in as many different ways as I can. I think stacks is a great way to do it for me. And VeChain, which I used to hold back in the day, I tweeted that it was underperforming like a week ago, and now it comes roaring back 35% in the green. Not bad, not bad. And by the way, we're talking about these token prices. Nothing's financial advice. I'm just sharing my opinions. This is supposed to be entertaining. First and foremost, you have your risk tolerance. I have mine. Do research, go with that. My portfolio is for me. It's probably not for you. But if you want to know about my portfolio, I share it periodically in my Telegram, and I will be sharing it more on socials just to, provide transparency to the audience. Recently, I've shared some of my limit buys that got triggered by this recent pullback, and you could see that in my Telegram if you are so inclined to join. That is in the description below. Let's look at some losers here. Losers, not so bad, only down 3% the last 7 days. That's Render and Akash. So you could see the theme of DPIN giving back a little bit. It was overachieving for a long time. I'm personally not concerned with DPIN. I'm positioning money into DPIN more and more. And then we got this Not coin, which has been extremely volatile. It's been in either the winners or the losers the last couple of times I've done these streams. And It's been a while since the last stream, right? The last stream we talked about Trump as is he the Bitcoin candidate that we all hope he is? We talked about that last time, and we talked about cybersecurity, Kraken being taken by Certic for $3 million, but then they gave back the money. So I guess that's not in the news anymore. People in crypto really have short attention spans, short attention spans. But I think cybersecurity is another one of those overarching themes that we should watch. Maybe we'll have to have a special segment on that soon, as best as I can explore into an area where I'm not an expert. Maybe we have some important cybersecurity news coming. We'll have to see about that. All right. All right, all right. So we've all seen this 100 times. Good Lord, what a photograph this is. No matter what country you're from, no matter where you stand on Trump, who is, I guess, the most controversial figure, maybe besides the Kansas City Chiefs kicker now. It's a pretty epic photo. This is a cool article in the New York Times, actually, that I kind of found by accident. And um, one of the a pretty fair piece on Trump coming from the New York Times. I live in New York. The media here is not kind to him, but the commentary here by the author is quite good. Compares it to some other um, images from history, and I remember this one. I remember this one. Geez, um, here's another one, man. This is this is the bullet. This is the bullet, and because of the speed of the bullet, obviously it's distorted even though this is an HD photo. But we got some crazy photos and some crazy video out of all this. And it comes right before the Republican National Convention, right before Bitcoin Nashville, which Trump is supposed to be a speaker. It comes right when there's some uncertainty in the crypto markets, while the traditional markets seem to be doing perfectly fine. And also election season is heating up. It's heating up. But um, these images are going to be politicized to no end, especially with the events that I mentioned. Is this good for crypto? Does it not matter in the long run for crypto? We talked last time about Trump positioning himself to be a friend of the crypto community. I guess we'll have to see. I guess we'll have to see. And Beto says Teflon Don. Yeah, Teflon Don for I guess a different reason than what he was given the name, what the name came from, right? So I guess we should talk about whether or not we think Trump is an ally to Bitcoin. I don't know if I would look at this as like an absolute, but let's just look at the news as it relates to the shooting. Another wonderful AI image on a crypto publication site. I mean, they're so lazy, these images, but it's part of that like crypto media. You got to use AI for everything. But it says Trump reportedly in good spirits will still attend Nashville BTC. I can't imagine this being bad for crypto. And selfishly, I wish more politicians would just turn their backs on what's going on in the world every once in a while and look at this crypto niche community. And it is very niche. It is very niche. So, um, man, what's he going to say at this conference? Is he going to have a huge speaker slot? Is he going to just come in, make a couple comments? Hey, crypto's good. It's a new way of transacting. See you later. I got to hit the campaign trail. I don't know. But one thing's for sure, the way the SEC has behaved towards crypto, especially Gary Gensler, who used to be an MIT professor, was evangelizing DeFi, getting paid to do it by MIT. All of a sudden, everything is a security, everything is bad, slapping these frivolous lawsuits on centralized exchanges. I'm sure it's not going to end. as a crypto community, which is still very niche, despite the market cap, we kind of need allies in Washington. Crypto is not very good at organizing. I don't see them out competing the the traditional finance by any stretch of the imagination when it comes to lobbying. But Trump could pick up support from people who I would imagine are the biggest single issue voters in the country. I think people that got into crypto 6, 7, 8 years ago or earlier are probably single issue voters in terms of being anti-establishment banking, freedom to transact, privacy to an extent, code being considered speech, hopefully being protected under the First Amendment. I don't know what he can say that would be bad for crypto. Just him being there is probably good for crypto, especially now that he's probably a favorite to win the general election and drag a lot of congressmen and senators across the finish line with him, which is really his MO, right? His MO is if he endorses you for Congress, you got a 90 something percent chance you're going to get in if Trump endorses you. Senate, pretty good also, right? He got 3 Supreme Court justices through heavy scrutiny with a really tough process. So if Trump becomes president, it's not only the White House, it's Congress, it's Supreme Court. And even if Trump is a quote unquote lame duck president, the people that he gets across the finish line with him might be there for years to come. And it looks like he's probably leaning towards kind of a young VP candidate who maybe can carry the torch. I don't know. But here's Bitcoin Nashville. They still have him up on the screen. Got some other people here. You got Robert Kennedy. I don't understand the obsession with Robert Kennedy. It's just me. Maybe I just don't get it. I don't get it. Michael Saylor. I mean, he's the hardcore Bitcoin maxi that everyone loved for years. Now we need it to go more mainstream. What better way than to have candidates for the House, the Senate, and the White House actually be somewhat lenient towards crypto and understand this is a new technology. It should not be taxed to death before it has a chance to grow. Let the innovation explode and then tax it later when it's way bigger and the government can, get their cut, so to speak. Got some people in the chat here that have been around since the beginning. Belinda Lee Cook, good to see you. Ambito, like I mentioned. Zavoom, hopefully I pronounce your name correctly. And Dustin. Dustin already provided a spoiler. Are there too many chains? He says yes. We'll see. It's relative. All right. So before we even get to Bitcoin news, obviously this is Bitcoin news. But I just want to shout out my sponsors before we get to the commentary here. And my sponsors are Shade Protocol. That's private DeFi on the Secret Network. They have a front-running resistant DEX along with a slew of DeFi apps. It's new and improved. There's analytics on the site that are super helpful. I'll be releasing a video about them probably this week, showing people how to navigate the whole privacy wrapper and how it does differ a little bit from other DeFi applications because of the privacy. Look for that. And then Kinetics Finance. Kinetics Finance is a perps exchange on the Kava network, which is a stable coin liquidity hub in the Cosmos ecosystem, and EVM, I should say. I use MetaMask when I'm over there. And they're leveraging AI to help their traders make better trades. It's an AI companion. They just airdropped and launched their token, the Kai token. That's KAI, ticker symbol KAI. And I'll have a video coming out on them as I play around with some of their new features that have launched the last couple of weeks. So those are my sponsors. Happy to have them. They actually make this possible. They basically make it worth my while to spend all these hours to prep all this content to edit all this content. And yeah, appreciate those sponsorships. Let's get back to the Bitcoin. Got a couple Shade fans in the audience. Yeah, I like Shade. It's the only DEX where I actually supply liquidity. All right, so. Bear with me. Slight technical issue here. I'm using new software, and I just lost my screen share. There we go. We got it coming in. This should work. This should work. It's not working. Start from scratch. Ambito saying Shade is the only place where he found that he can get a double-digit APR on Kuji. There you go. I did not know that. All right, so let's switch it up. Let's go this way. All right, we talked a bit about Bitcoin Nashville. Trump is going. Presumably, he's going to have something big. He'll have just announced his VP candidate, who crypto as well. But for the last couple of weeks, there's been this story about the German government, and the German government has been apparently dumping Bitcoin that was confiscated in some money laundering case. So let's zoom a little bit. I got bad eyes, guys. I got bad eyes. And by the way, I quit caffeine, so that there might be some hiccups on the stream. Just bear with me. Quit caffeine, quit alcohol. I'm basically the only drug-free content creator in the entire space, and that is why you should subscribe to the channel. That's why you should subscribe, set the notifications. You'll get caffeine-free, alcohol-free, drug-free content from now until I change my mind on all that stuff. So it's one of the perks of being here. And we get this Bitcoin news from 2 weeks ago. All right. So Bitcoin is was being sold by the German government. It was a lot. It happened around the same time as the pullback. A lot of people will say, well, there's a cause, there's an effect. Germany dumped the price of Bitcoin. Did they do it on purpose? Blah, 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 blah. I think that way also, that there's like cause and effect, but there are people that are experienced in finance and markets that would say, look, the charts are the charts, and people will retroactively look for reasons why a chart moves one way or another. So there's that perspective as well. Did they do it on purpose? Yeah, they sold their Bitcoin on purpose. Do they want to tank the price? I don't think they wanted to tank the price on themselves, but everyone was bad mouthing Germany. And then a couple days later, they're almost done, guys. Don't worry, Germany's almost done tanking the price, and then it's just blue skies after that. They've only got 5,000 tokens. That's it. Only 5,000 tokens. And then, boom, we take off from there. Well, it turns out it was not Germany selling the Bitcoin. It was one of the states. So on a local level, this Bitcoin was being sold. And it turns out that this is actually the policy, regardless of the asset that they confiscate. They have to sell it within a certain amount of time. That state is called Saxony. Saxony, I've heard of it. I've never been to Germany, but I have been to German bars, and Saxony is a place in Germany that sells Bitcoin apparently. But back in January, 6 months ago, they seized 50,000 Bitcoin. And I highlighted some stuff here. It looks like the highlights have gone away, but basically the author wants to make clear it is not Germany selling the cryptocurrency. It's a small state in the eastern part of the country, Saxony. And second, though crypto fans have roasted the decision to dump so much of their beloved Bitcoin, Saxony doesn't have a choice. It is part of their policy. Whatever they seize, they liquidate it. It makes perfect sense. Why do they want to hold cryptocurrency if they don't have a way to manage that asset? It doesn't make sense. You can't just expect governments to pivot on a dime. hey, we confiscated this new digital asset that almost nobody really understands how to keep secure. What do you want them to do? I'm never worried about selling. I think it's I think it's always a good thing when a whale wallet unravels. It's not good in the short term because then you have that sell pressure that drives the price down. People get liquidated because of the degenerate leverage trading that exists in crypto by inexperienced investors and traders. And I'm never worried when a whale wallet unravels. I'm not that worried. I'm definitely not that worried. But this kind of highlights a problem with decentralization. And I guess that's my take. And that's why I'm rehashing this Germany thing from a week or two ago. And in general, when we talk about decentralization, it's not only the infrastructure that these systems are built on, it's the distribution of the token. And I have a tweet for you. Always have a tweet, right? Let's see how this looks on this new screen. Some people in the chat are saying, 5 on it saying, Joe, I told you, switch to Streamlabs OBS. Well, Restream updated and they actually have a lot of the features of a Streamlabs OBS, and it's simplified for someone like me who has a lot of moving parts during the live stream. So I'm going to give this a chance before I do switch to Streamlabs OBS. Obviously, there's more granular control over the way that I do the stream. I'm not there yet. I spent a lot of my time learning how to edit from you. So that'll be the next thing. I'm a boomer in crypto. It takes me a long time to learn this tech and to learn how to present it the best way. So bear with me. Hopefully this is good. The rebrand should take your attention off of all these moving parts that I'm trying to balance here. But here's the tweet. Emperor Osmo has got a good account. 70K followers, well deserved. Says, I feel like, and he's talking about token distribution at the Genesis event, which is when proof of stake tokens are typically given away. I feel like the Penumbra team thinks crypto investors don't know how to read. He's referring to their release of their token distribution. Penumbra is a new blockchain in Cosmos. And this is their token, the token. The allocation gives off those vibes. Contributors 13%, labs 4%, commons 4.5, whatever that is, 20%. So basically he's saying these are all allocations that go to their own team. They're trying to hide this by splitting it into different segments. And here's the graphic. And he's replaced this with team, just to highlight the fact that when you look at these pie charts in the white papers of these projects, and you say, okay, look, 20% goes here, 15% goes here, 5% airdrop, the team only gets 11%. Cool. That means 89% goes to everybody else. No. My biggest concern with proof of stake and its viability long term is exactly this. The distribution of tokens manually to close friends, employees, insiders, they could be having their wallets hit multiple times. The same person could be here, right? The same person can be getting hit. You don't even know how many people unless you go to the Block Explorer. And with Bitcoin, we know that there's a whale wallet. It's like 10% of the supply. Presumably that's Satoshi's wallet from when he was beginning the mining process, bootstrapping the network, and that wallet has never had an outgoing transaction. Most people just presume that's an inactive wallet. The private keys are lost. Don't worry about it. That's not the case in proof of stake. We know all these wallets are accessed by somebody. So if one person has 5% of the supply, and then someone close to them has 5% of the supply, and then someone else close to them has a 5% supply, then there's a multi-sig with 5% of the supply that those three individuals control. We basically have 20% of a supply of a token controlled by one entity. 3 individuals, but one entity. And I'm not talking about Penumbra specifically. This is a hypothetical, but I think this hypothetical occurs more often than not. And man, when we talk about decentralization, I don't care how many validators there are. I don't care. I don't care how many wallets there are. It's more about individuals and how much of the supply or activity a small amount of individuals can control or influence. With Bitcoin, there's a wallet sitting there with 10% of the supply. If we knew that person had the private keys and could unload that onto the market at any given time, yeah, that would be a concern, right? That might devastate the price action for a year or two. It might. With proof of stake, this is why these tokens underperform, in my opinion, out of the gate. The tokenomics are not well thought out. They're put together to benefit a few people. Yes, those people have to get paid. Selling your own token into a launch is not the way to do it. You're stifling growth and network effect before your project even gets developed. So again, the lesson from the whole Germany thing, oh, Germany's tanking the price of Bitcoin. Decentralization also has to do with distribution of the token. I learned this the hard way messing around with NFTs in 2021, where one person could annihilate a collection if they had a whale wallet that they decided to unravel one day on the open market. Maybe the floor price for an NFT was $100. And then if someone else has a healthy percentage of the supply and they just start listing them 95, 90, 85, and then a whole bunch at 80, then a whole bunch at 75, then a whole bunch at 50. They just tank the price, and then it panic ensues. With crypto, could even be more exaggerated because of leverage trading and also AMMs. So that's the point that I wanted to get across. Crypto Sailor says in the case of Bitcoin, that where am I? In the case of Bitcoin, the markets had no problem absorbing that. Yes, that's why liquidity is important and trading volume is important. Guys, a 10% dip in Bitcoin, even if it's rapid, unless you're leverage trading, what are you worried about? You're not buying Bitcoin unless you're a day trader. You're not buying Bitcoin to sell it in a month at like a 3% gain. You're probably accumulating because of the long-term implications of blockchain and crypto. Let's keep going. And again, appreciate everybody in the chat contributing. We got a few people here. We got someone on Twitch. So my first ever Twitch stream, someone actually found it. Unless that's me. I don't know. I don't think I'm logged into Twitch, but yeah, there's that. And a lot of audience on Twitter. Come over to YouTube. Play in the chat. It's fun. It's fun. What's next, guys? What's next? Oh, final thoughts on Bitcoin. I wanted to talk about mining, and I have had my attention turned. I've had my attention turned to mining and how to get exposure to Bitcoin that way, investing in my IRA into some mining stocks. I don't even remember the tickers. I bought some of them a while ago. So hopefully you can see this. And we're going to talk about, this is from LinkedIn, some good content on LinkedIn, some really good content. So sometimes I check over there. But this guy, Allard Peng, he describes a scenario where the Bitcoin miners are just not as profitable as they need to be. And you're seeing some, I guess, readjustment around the halvening. I don't know what else to call it. Network difficulty is down 10%. And transaction fees are at 5 sats per VByte. I don't know what it was before that. But when the halvening goes down, the inflationary rewards to the miners is cut in half. Transaction fees are down. I don't know. They're saying from the halvening. I don't know what it's down over 6 months, 12 months, 18 months. But the hash price, and this is the expected value of earnings for running 1 petahash per second for a whole day, it's at record lows, right? So what does this mean? Well, if the difficulty is falling, miners are turning off their machines. Miners are downsizing, so to speak, in this lower revenue environment. Hash price falling means miners are just earning less for their work, and these are obviously correlated. And he says miners will be forced out of business at this rate, but it's actually a good thing. Makes Bitcoin a stronger asset. Proof of work is so perfectly competitive that it will continue spreading all over the world, increasing the decentralization of the network. And he refers to it as anti-fragile. So despite a possible capitulation with Bitcoin miners, this is part of the process of decentralization, he says. He also says large miners who are not diversifying into AI or HPC or some other revenue streams are highly not going to make it. So he's saying that miners should start to diversify because large miners are eventually going to occupy a smaller percentage of the network hash rate over time. Smaller miners who could take advantage of different energy sources will bring more machines online, and they'll compete, right? And they'll compete. So we talk about this all the time. Compared to proof of stake, proof of work is superior when it comes to decentralization. Yes, proof of stake is generally cheaper and it runs smart contracts. I get that. But he says that in proof of stake, one of the issues is stakers can slowly compound their control over the network because stake tokens earn more staking tokens. And this is without a cost, right? With proof of work, bringing new tokens into circulation, there's a cost that's incurred. And in general, miners are only going to sell what they need. And a lot of times they hold back some of the supply to sell when the price action's better, right? So this does blunt some of the volatility in the upward direction. But in general, that's going to be desirable long-term to attract TradFi investors and all that, because no one from the real world of investing is going to put a significant amount of their net worth into an asset that can go up and down 30%, 50%, 100% in a day. It's just not happening. And this is part of the price action dynamic. The miners are heavily involved. They have to pay to get these tokens. They want to sell them at a profit as often as possible. And this was his name, Allard. He says only one blockchain, Bitcoin, is truly decentralized because it's designed for incumbent leaders to gradually lose their competitive edge. And as this competitive edge, they lose it over time. He's saying the network becomes more decentralized, which is the opposite of proof of stake. Look, we're in Cosmos, right? For the most part, my audience is mainly in Cosmos. Where did I go? New systems, guys. Bear with the glitches. This is live. I would normally edit this out. You would never know that I make myself disappear off my own stream. But one of the problems we have with proof of stake is that it's highly centralized. I don't care how many validators you have. I don't care the geographic distribution. When it comes to governance and token distribution, proof of stake is not doing well. Proof of stake really operates like a DAO, which is basically like a company, right? And it's a disorganized company built on decentralized infrastructure. I can give you that. And that decentralization is on a spectrum. So you could say one network is less or more decentralized than another. But what Allard is saying, and I agree, proof of work is superior because that the market dominance will naturally erode over time. So these big miners are at a disadvantage at times, forcing them to give up market share to smaller ones. Whereas proof of stake, the opposite happens. We see this all the time. Smaller validators in Cosmos have to leave the active sets of chains, while bigger validators I mean, they're sucking up inflationary rewards and can be profitable even when prices are down 70, 80, 90%. All right. So, got a question here from Dustin. He says, you had a viewer on Twitch. What games do you play? Sir, I don't play games. Do I look like a fun person to you? I'm not. I don't play any games. I just don't have time or patience to play games. I used to play poker. I liked live poker. I didn't like playing online that much. And this Twitch endeavor is experimental. I've never been on Twitch. I've watched a couple streams on Twitch, other crypto content creators like Tank, but no, I am not permanently on Twitch. This is experimental. All right. So we can go off topic a little bit. I think this helps the the audience get to know me a little bit. I already said that no caffeine, no alcohol, and I'm the only drug-free content creator. I'm your only option if you want drug-free information about crypto, Web3, and all that, especially if you want user-friendly tutorials, interviews with builders who could actually speak to the end users and the retail traders, and you want honest takes on tokens that I'm researching with my biases completely on the table. Joe is my name. Dead Cat Media is the platform, the company. The platforms will be mainly Twitter, as was noted in the chat. Just join, subscribe. You have nothing to lose. If you don't like my content, you don't like my attitude, you don't like that I don't play video games at 44 years old, you just unsubscribe the next day. It's perfectly fine. But yes, like I said, you get drug-free crypto content aimed at the end user who is really the piece of the puzzle that matters the most if crypto is to gain any kind of mainstream adoption. See, I'm so out of touch as a boomer here. If you're on Twitch, you got to do a hot tub stream. I don't know what that is. I'll do an ice bath stream maybe, but I don't know what that is. All right. We're going to talk a little bit about the ETH ETF. That's what I wanted to talk about. So really quick. So, and let's get the ticker across the bottom. I like having the ticker across the bottom. It makes it look like a live stream when there's crap flying across the bottom, giving people a headache and triggering people's epilepsy. But let's talk about the ETH ETF. So I think ETFs are a mixed bag. You're allowing Wall Street foot in the door. You already see that a lot of the trading and settlement is happening off chain. That's to be expected. We have Bitcoin ETFs. You saw what happened to the Bitcoin price. We hit all-time highs before the halvening. I don't think that's ever happened before. Usually the all-time highs, at least the last 2 or 3 halvenings, the all-time highs happened about 5, 6, 7 months after the halvening. So Grayscale, one of the largest crypto asset management companies out there. I have some Grayscale funds in my Fidelity account. I've had it for years. And they announced their plans to go with an ETH trust, right? They're calling it a mini trust, and there's going to be a conversion. So if you have their ETH fund already, which is not an ETF, it's not an ETF, you're going to get a match, I guess, a 1-to-1 match, and their date is July 18th. The ticker is going to be ETH, ETH, which is interesting. Their other fund, ETH, is ETHE, and this is an announcement based on the fact that Ethereum ETFs appear to be coming around the corner. On July 8th, there was a submission deadline, I guess, for these filings. And just like Bitcoin, we're probably going to get some ETH ETFs. In my opinion, when we get these ETH ETFs, the next thing is going to probably be mixed ETFs, where you get exposure to 5, 6, 7 ecosystems as an ETF. That would be my guess. That would be my guess. So, what do I mean by that? You'll be able to log into Fidelity or whatever you log into. Is E-Trade still a thing? I don't know. I use Fidelity. That's the only one that I even know of. So you'll be able to buy a Bitcoin ETF. FBTC is the Fidelity one. That's the one that I have. You'll be able to buy an Ethereum ETF. So you'll get exposure. You can get exposure in tax-free accounts, which is interesting, right? Because I do most of my investing in a Roth IRA. My investment fund with my job, I cannot get exposure to crypto there. But you'll be able to eventually, in my opinion, buy an ETF that is like 30% ETH, 25% Solana, 20% Avalanche, and then maybe some mixed DeFi tokens in there, right? And you can do this already, but it's not an ETF, right? So that is where I think things will really get rolling. The ETFs give people an opportunity to get exposure to these crypto assets for better or for worse, without having to deal with wallets, centralized exchanges, taxes, or coming into any kind of contact with the tech, which is not for everybody. And I think that's one of the main things. If you're joining for the first time, you'll hear me say, most people do not care about the tech. And I don't think they should. I think most people don't need to know about the tech. ETFs are a new avenue for investment. I understand that people don't like them, but it's a mixed bag. There probably will be some shenanigans with manipulation and maybe leverage going on behind the scenes or off-chain settlement and all that. There's nothing you can do. There's absolutely nothing you can do. Coinbase custody and these ETFs, they might be single points of failure for Bitcoin right now, or at least possible issues, let's say, going forward as it relates to decentralization, price action. So speaking of leverage, last week I got back into the Twitter Spaces hosting game. I love hosting Twitter Spaces. I really like it when my Telegram group supplies questions, which you can do for all my Twitter Spaces. My Telegram link is down below. All you have to do is join, check the pinned message. I've got a Google form there where you can select who you want to ask a question to out of my upcoming guests. Last week I had Lavana and Nolis. It was awesome. We talked about leverage trading. And if you don't already know, leverage trading is when you could take out a position, either long or short, with more money than you actually have by paying a fee and then a continuous fee rate on how long you keep the position open for. Nolis, I would call it light leverage. You only get 150% of your down payment, they call it. So if you put down $100, your position becomes $250. So it's light leverage for a beginner like me. And then Lavana is more of your traditional, I would call it like a power user, degen, intermediate trader platform where you could take leverage 20, 30, 40 times your down payment. And we there's pros and cons to this. The pro is that you don't need a lot of money to make good money as long as you can size up the risk and the opportunity, the risk reward opportunity there. If you're taking 10x leverage and you long Bitcoin, if it moves 1%, you get paid off 10 times that minus fees. That's how Lavana works. However, you could lose all your money even though the asset you're betting on does not go to zero. So you have a trade-off there. But leverage trading was fun to talk. We talked user acquisition. We talked differentiating, competing in a field where there's lots of leverage platforms. We talked about the issue where a lot of good applications, they have bad marketing or bad token performance, what to do about that. And for Lavana and Nolus, both of them are pretty confident that over time, their token will reach like this floor where people who are familiar with the protocol and familiar with the tokenomics realize that the token is actually undervalued based on the activity on the platform and the revenue generated by the platform. And then there'll be organic buying there. Lavana uses their token not really as a staking token as we would normally think of it. Lavana is an application on Osmosis, which is a liquidity hub in the Cosmos ecosystem. And their token is basically used as a true DAO token to vote when to distribute revenue back to the token holders. I like that use case, assuming that the application has a pathway to being profitable. I think that's a perfectly fine use case for a token. I would prefer NFTs be used, but fungible tokens, totally fine. Nolus is a layer one. So their token has a few different revenue streams. I do hold the Nolus token, by the way, to be transparent. You could stake Nolus and you could earn rewards that way. You can earn Nolus tokens by depositing stablecoins, and you can Nolus is bought by the protocol to put buying pressure on the token as more volume runs through the protocol. So that's my weekly recap from last week. This week we have all new space right after the stream. I'm going to release a tweet that you, the audience, can retweet, share, tag people to win money, helping me market my spaces. And again, that's on X. My Twitter is down below. All my links are down below. If you like this content, this user-focused, early adopter-focused content, please, if you're new, following me, subscribing, it helps tremendously. So the headline of this stream was Trump, should he go to Nashville? Is he going to Nashville for Bitcoin Nashville? Ethereum ETFs incoming. July 18th is the date to look at. And are there too many chains? And I would love your feedback in the chat. Got some people in the chat. Are there too many chains? Are there too many chains? And this is inspired by a Reddit post that I found. I'm not going to share it because the font is kind of small, but I'll link it down below. But the Reddit post goes something like this. There's been a proliferation of blockchains exceeding over 1,000 as of 2024. And this raises concern, a question. Is every new blockchain necessary? That's kind of a loaded question, right? And the author of this post says that this trend of blockchains everywhere that we possibly don't need, it stems from greed, convenience, unsound economic principles. I feel like this person watches the stream because we talk about these things all the time on Twitter and on YouTube. Convenience is a big one, right? Really, the proliferation is proof of stake. Proof of stake makes it cheap, especially with Cosmos, to launch blockchains. And with blockchains comes tokens. With tokens comes liquidity. That liquidity a lot of times just gets siphoned from somewhere else. There's no organic demand for new tokens in some cases. So are they necessary from an economic standpoint? Probably not. Are they necessary from just a DeFi standpoint? Probably not. We've got all the DEXs and perps platforms and all that we need. Yes, I encourage new ones to launch because those are applications. And I want to see competition. I want to see the best applications with the best economics win out over time that are the best for users to take advantage of. But blockchains, how many do we need? I don't know. I could see a future where we only need 5. I could also see a future where every S&P 500 company has multiple blockchains that they use internally, privately, to make their businesses more efficient. to do accounting, to do payroll, to do supply chain management. I can definitely see that world. Right now, we've got all these blockchains, and are there too many chains? Let me go through this Reddit post before I comment. The economic security of running a blockchain, he says, involves significant coordination costs, including software updates, governance, and node operations. We see this in Cosmos. And by the way, this is from the Cosmos Network Reddit. So you might want to read this if you have a vested interest in Cosmos. I'll link it down below after the stream. Yeah, the validator sets are expensive. I've seen people estimate that it's $1, $2, $3 million a year to run a validator set. All of that expense is paid in a layer one token for the most part. Maybe there are some exceptions out there that are paying this out in a stable coin. I don't know about it. You need to overcome that cost. Otherwise, the token just trends to zero. And the way crypto is, for better or for worse, if your token price action is not favorable, people stop caring about it really fast. Really fast. We've seen people capitulate with 10% dips in Bitcoin. It's amazing. It's amazing. We've seen content creators just go dark. We've seen discords go dark of once blue chip projects for bad price action. It has nothing to do with the tech. But again, this Reddit post is about, is there too much of this infrastructure? Maintaining interoperability and governance, there's a cost to that. It adds complexity and expense. Look, if I launch an app on, let's say, Archway, and then I want to launch the same app on Terra, they're similar chains. Now I got to maintain code on both chains. My liquidity is fragmented. I just talked to a project today. We talked about fragmented liquidity for an hour. I was like, all right, and what does this have to do with me? If liquidity is fragmented and it hurts the user experience, I just won't use that. In fact, I'll block their Twitter and I won't even see updates from that project because I don't want to deal with it as an end user. Are there too many chains? I think people are free to launch as many chains as they want, but don't expect retail to fund this forever, I guess is what I would say. Don't expect retail to fund this forever. I don't think they will. I think that it's expensive for retail to use this stuff. Really expensive for retail to use this stuff because we're expected to buy, hold, stake, LP the tokens, and then the expenses of the network drive the token price down. So I would say too many chains, maybe not. Maybe not. Someone in the chat said we're going to see millions of chains. I could see that. Not in the next 3 years, but in the next 10, 15. Whew. You might need a blockchain, kind of like how you need a Google Drive to run a small business, pizzeria, food truck, whatever. All your transactions, your POS might now be reflected in a blockchain that is, maybe it's public, maybe it's private, who cares? Maybe that blockchain is just a generic blockchain. Maybe Cisco makes blockchain software 5 years from now. Maybe Microsoft makes blockchain software and you buy it just as you would your normal, Microsoft Word and all those other apps. It's part of that suite, right? But blockchain's good at accounting. Just because you launch a blockchain doesn't mean the economics are going to work out. And in fact, they don't more often than not. The prices tell the whole story there. And I think the lesson is we don't have too many blockchains. We have not enough apps. There's not enough apps. People should not be expected to get excited about DeFi primitives anymore. This is not DeFi summer where the early adopters can make triple and quadruple digit APRs by stress testing these DEXs and these lending platforms and stuff. It doesn't make any sense. I don't even want to use a DEX anymore. Why can't there be an aggregator in my wallet to where I just log into my wallet, I tell it what I want to do, and then I just click approve, and then 10 seconds later, it does what I want it to do. Why do beginners have to know about LPing and staking? They shouldn't. So I think, are there too many chains? Probably not long term. Right now, there are more chains than apps, and that has to change. Otherwise, people are not going to use this stuff. End users are going to be disenchanted. And then at a certain point, people who would become power users of of blockchain, crypto, DeFi, NFTs, and all that are going to say, you know what, screw it. I'm going to just go buy some ETFs and I'll check the price every other month, every other year, if it's in my retirement account. And that's that. And that's that. So thank you, everybody. If you stuck it out to the end, you are a trooper. I tried to keep this under an hour. I failed. But yeah, I had almost 200 people watching, a lot on Twitter. Twitter really is a great platform. Video, I think YouTube is superior. We'll see what we can do on Twitch. And thank you guys for joining. Thanks for supporting my channels as I go through this rebrand.